Madam Chair, good morning. It is such a pleasure to be able to recognize you here on International Women's Day, setting an example for other women to follow, and furthermore, setting an example in public service, which, as we know, this country so desperately needs.
Thanks for having me. Glad to be here.
Let's begin here. Regulating Wall Street is a key issue on the campaign trail. What's at stake for the SEC in this election?
Look, I think what you want the SEC to be always, since 1934, since its founding, is that very strong independent agency where you have not only an expert career staff, but commissioners who are dedicated to its mission. And so, I have confidence that will happen throughout
You don't think that's at risk with the outcome in any of two directions?
I think appointments are extremely important, but I think historically you've seen the seriousness brought to bear on those appointments that it deserves, given the function of the SEC.
Well, you've accomplished a great deal in your 3 years as chair of the SEC. Record numbers, some of that is clearly untouchable, right? Record numbers of enforcement actions, billions of dollars collected in fines and penalties. But you've also enacted rules that remain unpopular on Wall Street. Would you not expect, say, hypothetically speaking, a Donald Trump or a Ted Cruz to want to reverse, undo, or perhaps even gut some of that?
Well, look, I think it's always an evolving landscape in terms of what's optimal regulation, including watching what their impacts are as they go forward. So you want attention to rulemakings going forward, but nobody wants to relive the financial crisis. And many of those rules that the agency has executed on, other agencies have executed on, they have really made us much more resilient to that as a market structure, as a financial system, and nobody should want to undo that.
So to understand what you're saying, if we were to roll back some of what the SEC and other agencies have done, you believe we would be exposing financial markets to greater potential for another crisis?
Without question. Without question.
How about what the SEC gets from the left and not just from the right? There's criticism on both sides. Does the politicization of the agency and regulation, more broadly speaking, make it harder for you to do your job and make it harder for the next SEC chair to do his or her job?
Look, I think the criticism from all directions comes with the territory. And the SEC in particular, in its policy making particularly, I would say, it touches very important industries, investors, everyone else, and about 50% of what you do is going to be disliked by everybody. It won't be the same 50% every time. And so the key for the SEC is to fulfill its mission as an independent agency, and I think it does it very well. You keep, irrespective of political party, you come into that agency with a mission to fulfill, and that is not to be politicized.
Madam Chair, the clock is ticking on this administration. Investors and the financial services industry, furthermore, are waiting for the SEC to take action on several fronts. Let's start with market structure. What can you accomplish before there's another president in the White House and probably someone else running the SEC?
I think we've accomplished a great deal already. One of my highest priorities, even before I was confirmed, was really to focus on enhancing our equity market structure. And we've taken a number of measures to date to do that. We've also set up the mechanism and the energy to do really the first comprehensive review of the equity market structure in the agency's history. We have a market structure advisory committee that's quite active and getting more active. We're taking on, all of the issues, soup to nuts, while we also optimize some specific areas that we can do more in the short term. Late last year, for example, we proposed a rule for greater transparency for ATSs, enormously important. We'll take some more measures throughout the rest of this year and into the next.
You've talked about the potential for fundamental changes. Will that comprehensive review be done while you're the SEC chair, and will we see those fundamental changes put in place?
I think some of them, may be in the eye of the beholder what's fundamental or not. I think any change that optimizes the equity markets for investors and those companies seeking to raise capital are fundamental. But this is a review that will continue past this year without any question. If it's done right, it needs to be comprehensive and deal with the most significant issues. Worst thing you can do is to look at something that superficially seems to make sense, but you don't have really the data to justify going forward on it, and you may do more harm than good. So it's not something you want to rush, but it's something we certainly have major traction on and will continue to.
What do you think could or should be done to improve, in your terms, the equity market?
Well, I've talked about this at some length. I mean, in addition to sort of the number of the areas that we're looking at, whether it's conflict of interest, the fee structures, you've got to look at the SRO structures and whether that still makes sense or not. But there are also places to get greater transparency for investors that are enormously important, not just ATSs, but also on what happens to your order, how is it routed, and who gets paid what, and who's actually executing for you. Are you getting best execution? So all those issues are enormously important.
Some of that is wrapped up in concerns over high-frequency trading, the maker-taker model, and specifically the pilot program that the SEC has talked about starting.
Tick size pilot, which will begin this year.
It will begin while you're the chair of the SEC.
Will begin while I'm chair of the SEC. Very pleased to see that get launched. I think it's very important. And the objective is obviously to get the data to see whether you can increase secondary liquidity for particularly smaller businesses. And so, very happy to get that done. And it will begin this year as well. In terms of high frequency trading, I mean, I think it's again, as with probably most areas that we deal with, very important to sort of define one's terms. High-frequency traders are not a monolith. They use lots of different strategies. You've seen studies that talk about all the good and the benefits they yield to the market. Some of the more aggressive liquidity-taking high-frequency trading strategies, maybe the opposite of that. So we're studying that very carefully. If high-frequency traders engage in market manipulation, we continue to bring enforcement cases as we would with any market participant. But again, the automated markets and the high-speed markets and the use of algos is something, it's not just high-frequency traders, it's also broker-dealers on behalf of institutional investors use that. Lots of benefits come with that, but some risks come with that we have to be constantly evaluating.
Back in 2014, you promised a rule to address some of those strategies, and at the time you described it as aggressive and destabilizing. Has that been put in place, or is that something that we have yet to see while you're still the chair?
What is very actively ongoing is the staff formulating a recommendation on the anti-disruptive trading rule, which is the one I talked about before. And that's essentially to deal with periods of particular vulnerability in the markets where some of these aggressive liquidity-taking strategies may well be damaging to the markets and investors. So that's something that we're pushing very hard on this year.
Okay, more specifically on a related point. Will you approve plans for a consolidated audit trail, the kind of system that everybody needs to understand what happened during the flash crash and more recently on August the 24th?
That is certainly, and I think I spoke about this a little while ago, very high priority to get that plan approved this year. And I expect the Commission will actually act on a notice to get notice and comment on that quite soon, actually.
How about a fiduciary standard for financial advisors?
Again, that's something that I think is enormously important, that every advisor, whatever their nomenclature, if I can call it that whatever their regulatory regime, acts in the best interests of their clients. It is, as I have said before, and we would do it under Section 913 of Dodd-Frank, it is not a quick path. The SEC's been studying this because of its complexities, its importance, its difficulties, for many, many years. And I think it's enormously important to proceed right on, and I certainly hope that we see traction on it this year. But I don't want to create the impression that it's it's something that's going to be quick or easy.
The SEC may not put it in place before you leave.
I certainly hope there's a proposal this year.
The Labor Department, as you know, is about to put its own fiduciary standard in place for advisors on retirement accounts. Is it not crazy that brokers are going to have to operate at some point in the not-too-distant future under two sets of rules regulating pretty much the same thing?
Well, I mean, again, we are...
That sounds like government not working.
Coordination is very important. There's no question about that. You see it in the over-the-counter derivative space where we need to coordinate with not only the CFTC, but international regulators to be at least as compatible as we can be. We don't have identical market spaces. And that's certainly true with respect to a fiduciary duty rule. But we're independent agencies with independent, statutory responsibilities. Department of Labor has the ERISA space, enormously important. And even today, brokers who are in the ERISA space are dealing with our rules and they're dealing with the Labor Department's rules. So it's not a new phenomenon that there may be different requirements in those different spaces. Again, one should try to coordinate as much as you can.
Madam Chair, securities lawyers, many of whom I know you know well, have noted a marked decrease in the SEC's use of administrative law courts over the past year. Why has the agency been turning more to federal courts to adjudicate enforcement cases when your success rate in the administrative courts has been so great?
Well, I mean, again, you take a slice of the statistics, but if you look over time, our success rate is quite high in district court as well as administrative proceedings. Last year, for example, our record in district court was 100%, actually, and it was not in administrative proceedings. We lost some there. You know, both systems. Look, Congress obviously set up the administrative proceedings as an avenue for us to protect investors in certain kinds of cases. We certainly want to use that authority. Other federal agencies use it too. We use both, avenues. We've tried to increase the transparency of our choice process there. The commission has to approve the venue choice. Both systems are fair. They're not identical. You get some rights in administrative proceedings you do not get in district court, and I know that from being a litigator and a trial lawyer.
Specifically, well, at least in a related matter, I guess it's related, Justice Scalia was very determined, as you know, to narrow the scope of insider trading prosecutions. Does his death and the current vacancy on the Supreme Court tip the scales in favor of regulators?
Very hard to judge that. I wouldn't, try if I could to sort of, guess at what impact that may have. What we have done since the Newman decision, which is, as you know, was a Second Circuit decision.
The Newman-Chason case.
Yes, the one that it was actually a U.S. Attorney's Office case, is obviously take cognizance of it. It is an important decision. Its impact has been less, I think, on our enforcement on insider trading cases than some of the commentators, at least, had envisioned. And so we've continued with a very active insider trading program. Enormously important to do that. The Supreme Court has taken cert, as you know, on a Ninth Circuit case, which will deal with the personal benefit requirement, and that's a very important decision to watch. Do
you, again, you're a former prosecutor, this is your wheelhouse, do you affect the death of Justice Scalia to affect the outcome of that case?
Can't judge that. Really can't judge that. I mean, there are a number of different issues that could impact the thinking there. I wouldn't fathom a guess even.
Now, Madam Chair, again, recognizing all the accomplishments you've had as chair of the SEC, and again on this International Women's Day, blazing a trail for other women to follow. What you have done and what you have done in concert with other regulators, I think it's fair to say, is attempt to change the culture on Wall Street and the financial services industry. To what degree have you been successful?
I think both we and I think much of Wall Street has been significantly successful, but there is a distance to go.
What's left to do?
Well, changing culture is not an overnight or even a 5-year project. I mean, what you find, I think, when you're trying to change culture in particularly significant ways is you change it at the top. I think we've been enormously successful there. You may even change it in the trenches, but you've got a big swath of middle managers where you've got to make sure the message is taken in, absorbed, and lived, basically. So it's an evolving responsibility, I think, on the part of not only the regulators but also Wall Street.
Madam Chair, we thank you very much.
Thank you.
A pleasure speaking with you here on this International Women's Day.